So let's talk about something really specific. How long does it actually take to double your money? I mean, for real, to turn, say, 10 grand into 20 grand. Most of us just kind of guess. Well, let's dive into this because the answer could genuinely change your entire financial future.
Okay, check this out. We've got two people here, person A and person B. Both of them start with the exact same 10,000 bucks. Fast forward 10 years, person A, well, they have about 11,000. But person B, whoa, they're sitting on over $25,000. Same starting point, same amount of time, but a completely different world financially.
So what's the deal? What was the big secret? What did person B know that person A didn't? And look, it wasn't some hot stock tip or a super complex, risky strategy. It was just a simple piece of math, something that takes like 10 seconds to get.
See, the problem for most of us is that our money is stuck in the slow lane. We put it in a savings account, we watch it creep up, but with inflation and everything, it just feels like you're running on a financial treadmill, You're putting in the effort, but you're not actually getting anywhere.
And that brings us to the most important point. We need to shift how we think about this. It's not just about how much money you're putting away. The real game changer is the speed at which your money is multiplying. That speed? Well, that's everything.
And this is the tool that person B had in their back pocket. It's called the Rule of 72. And trust me, it sounds kind of official, but it's an incredibly simple formula that basically lets you predict the future of your money.
Here's exactly how it works. You just take the number 72, and you divide it by whatever your annual rate of return is. That's it. The number you get is a really good estimate of how many years it's going to take for your money to double. It's that simple. So let's look at what this means in the real world. If you're getting a 12% return, maybe you're a bit more growth-focused, your money doubles in just 6 years. Pretty amazing. At 8%, which is a pretty typical return for a basic stock market index fund, it takes 9 years. But now look at that top row, a 1% savings account. It would take 72 years to double your money. 72, that's a whole lifetime. This right here is the difference between getting wealthy and just not.
But hang on, there's a really important catch. The interest rate you see advertised, that's not always the rate you actually get. There are these hidden enemies that are constantly eating away at your growth.
So let's say your investment is advertising a solid 8% return. You're thinking, okay, great. 9 years to double my money. I can do that.
But then we've got to subtract what I like to call financial friction. These are the forces that are slowing you down. You've got investment fees, which might shave off 2%, and then you have inflation, just the general costs of everything going up, which historically takes away about 3%. These things are silently nibbling away at your earnings.
And just like that, you take your 8%, subtract the 2% for fees and the 3% for inflation, and suddenly you're left with the real return of only 3%. That's the actual speed your money is growing.
And this is why that matters so much. At 8%, you are on track to double your money in 9 years. But at your real return of 3%, it now takes 24 years. Think about that. Those hidden costs just stole 15 years of your life waiting for your money to grow. It's a huge difference.
Okay, so once we get our real return sorted out, we can finally tap into the most powerful force in finance, compounding. This is where things get really exciting and where growth just takes off.
Let's just watch this play out. At a 10% real return, your 10 grand doubles to 20 grand in about 7 years. So you made $10,000. That's great. But now keep watching. Look at that last 7-year jump from year 28 to 35. Your money doubles from $160,000 to $320,000. That's a $160,000 gain in the exact same amount of time. That is the magic of compounding. Eventually, your money starts making way more money than you do.
And this really gets to the heart of it. Patience is everything. The truly life-changing wealth is built in those later doublings, but you have to have the discipline to stay invested long enough to even get there. If you get scared and pull out early, you miss the entire fireworks show.
Okay, so we get the math, we get the magic of compounding. But what can we actually do about it? How can we actively speed this whole process up and shorten our own doubling time?
Well, it really comes down to 3 key things. First, minimize that friction we talked about. You do that by choosing low-cost funds and using tax-advantaged accounts. Second, you got to increase your contributions. Just keep adding money, even if it's small amounts, to feed that compounding machine. And third, and this is a big one, stay consistent. Don't try to time the market, just stay in the market.
Let's really focus on that first step, minimizing friction, because it's the easiest win.
As you can see here, if you're in a low-cost fund, the fees you pay over a lifetime are just this tiny little sliver. But in a high-fee fund, that slice gets huge, and it's literally just eating your money. We're not talking a few bucks here. Over 30 or 40 years, the difference between a low fee and a high fee can add up to hundreds of thousands of dollars. It's the same investment, but you get a totally different result, all because of fees.
All right, we've covered a lot. We've talked about returns, fees, compounding, but the single most powerful variable in this entire equation, the one thing you can never, ever get back, is time.
Just look at this. It's staggering. See that bar on the left? That's someone who invests $10,000 at age 25. By retirement, they have nearly $1 million. Now look at the bar on the right. Same person, same money, but they waited just 10 years to start at age 35. They end up with less than a quarter of that. That single decade of waiting cost them over $700,000. Let that sink in.
And this quote just says it all, doesn't it? We can't go back in time, but we have total control over what we do today. Every single day you wait is another day of compounding that you can never get back.
So look, doubling your money isn't some kind of magic trick. It's just math. The rule of 72 proves that your money is going to double. The only question is how many years it's going to take. And the most incredible part is you have the power to change that number. You can actually shorten the timeline. So the real question you have to ask yourself isn't if your money will double, it's when are you going to decide to make it happen?